This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network and Moshway Don are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
Next is Crexendo Communications, ticker symbol CXDO, and we'll be talking to the CEO of that company. And this is Maj Swedan from Geo Investing. I'm here with Doug Gaylor, COO and President of Crexendo Communications. Symbol CXDO trades in the NASDAQ with its recent uplisting not too long ago. CXDO plays in the cloud communication, UCaaS kind of area, and that's a particular area I'm really interested in investing in, and it's one of my higher conviction holdings in that space. And I'm really excited to hear Doug's story today and get an update on how things are going. And I kind of want to share that with a wider audience outside Geo Investing. And with that, I'll introduce Doug. Thanks for being here, Doug. Let's talk about Crexendo.
Thanks, Maj. Great to be here, and always excited to have our discussions and tell you about the great progress that we're making here at Crexendo. So, as you already highlighted, Crexendo is a unified communication as a service player. So we're a cloud communications company doing business telephone services for small and mid-sized and enterprise level businesses, competing against the likes of the RingCentrals and the Vonages and the 8x8s and the direct marketplace. And then we're extremely excited that last quarter we announced and finalized our acquisition of NetSapiens, who is a platform provider of UCaaS services. They're the fourth largest platform provider in the United States behind Cisco's BroadSoft, Microsoft's Metaswitch, and Mitel's platforms. And so, we're really excited about where that positions us in the industry. And we had a really strong earnings call just yesterday, and really excited to talk to you about where the company is going from here.
That's awesome. Now let's get right to NetSapiens real quick here, because that kind of transformed the company. So NetSapiens is giving you a much wider kind of product offering, right? So let's talk about what Crexendo was before NetSapiens and what it is after now, to give us perspective.
Yeah, perfect. And great question. And so if you think about what Crexendo was before NetSapiens acquisition, we were selling our UCaaS offering directly to end user businesses through a direct channel and through a partner agent channel. And basically what that means is that we were going out and selling our business telephone services to all size businesses, selling it through our direct channel, which is about 25-30% of our sales volume, and then through our agent partner program, which is about 75% of the revenues that the company was getting prior to the acquisition. So with the acquisition of NetSapiens, the great part about this acquisition is that it really fills out the portfolio. Where we were just selling a platform before directly to end users, with NetSapiens, we've actually bought a platform that sells to other UCaaS service providers. NetSapiens currently services over 1.7 million end users, and we anticipate that number being over 2 million here in the relatively near future. And so when we think about that captured audience, they've got their partner base is UCaaS providers selling the UCaaS platform from NetSapiens to their end users. So the merger is extremely exciting for us because it really rounds out our portfolio. Now we can sell direct to end users through our direct and our agent program, and we can sell to platform providers with a UCaaS solution through NetSapiens. So we really have all of the options covered now and really have a tremendous opportunity to grow this to the next level.
And that's good for your margins too, right? Because I think prior to the NetSapiens acquisition, some of your solutions were more third party, if I recall correctly, not necessarily all organically developed. Is that right?
Yeah. So for example, our collaboration tool. So we've got a collaboration tool very similar to Zoom. We're using your Zoom connection right now, but we've got a collaboration platform with the NetSapiens acquisition that's very, very comparable to Zoom. In my opinion, biased opinion, obviously a better solution than Zoom out there. But prior to that acquisition of NetSapiens, we were white labeling a collaboration tool. We were white labeling a mobility tool. And now with the NetSapiens acquisition, we bring a lot of those extra resources on the UCaaS platform in-house that were developed and designed by the NetSapiens team.
Great. And before I get into the numbers, what this does for you number-wise, well, what do you do for NetSapiens? What was your advantage you brought to the table for them? What did they see in you?
Yeah, great question. So if you look at the combination of the two, both companies were growing, extremely rapidly. Crexendo had 20% growth quarter over quarter in Q1 and Q2 in our traditional UCaaS. NetSapiens in their 2020 year had a 30% increase over 2019. So they were rapidly growing in their UCaaS offering. We were rapidly growing in our UCaaS offering. But this is a very competitive marketplace, and so two companies coming together to have more power, more leverage out there in the industry. So we bring to them just a bigger organization, very sales marketing oriented organization. NetSapiens was very focused on an engineering platform and have built a great platform, but they really needed the extra horsepower to get them to the next level from a sales and marketing perspective, and being able to grow the revenue and being able to make it a much more profitable business. So when you look at the combination, it's a perfect combination for us because it's an accretive acquisition. It's going to add immediate monthly recurring and one-time revenue streams for us. And it's going to give us a very long-term sticky customer, because the partners that are using the NetSapiens platform today, that's their whole business model. Their whole business model is built on the NetSapiens platform. So it's a very, very sticky customer partner relationship.
Excellent. So I want to get into margins in a second, but before we do that, why don't you talk about the size of NetSapiens compared to your size in terms of revenue? Let's break down maybe some of this information in the your Q2 release you just put out yesterday, in terms of were we seeing growth organically from both companies?
Yep, great. So we just announced our earnings this week, and so we had a 43% increase in revenue year over year for Q2 at $5.8 million for the quarter, compared to $4.1 million in the Q2 of last year. And we had a 20% increase in our UCaaS revenue for the quarter. So a very strong quarter for us. And that quarter only included 1 month of NetSapiens revenue. So NetSapiens was finalized on June 1st. So we only had a 30-day contribution of NetSapiens. So we anticipate that with Q3, that'll be a full quarter of NetSapiens revenue. So that'll be a really, really strong shot in the arm for us from a growth perspective and from a revenue perspective. Again, when we look at the organization, even putting the two organizations together on a non-GAAP basis, we had a slight non-GAAP profit for the quarter for Q2. Obviously a lot of acquisition costs and amortization costs that were built into Q2 that led to a GAAP loss. But when we look at where we are financially, we're extremely, extremely strong with this acquisition, and it's going to be a very accretive, very positive revenue and bottom line growth going forward.
It's funny when you look at, I can't believe we're talking about profitability in the space. When you look at other companies in this space and how they've evolved, and compared to your size where you're at now, you're doing like $6 million a quarter right now. Most of those companies, and even the larger companies, are losing money on a GAAP and non-GAAP basis. So it's pretty cool that you're making money at these levels.
Yeah, absolutely. I mean, I think when you look at the competition out there in this segment, obviously much larger organizations like the RingCentrals, the Vonages, the 8x8s, but they've been racked with tremendous losses. We were extremely proud of the fact that we had GAAP earnings both in 19 and 20, and so very strong years for us. And so even with this acquisition, even with the pandemic headwinds, we're still doing extremely well with 43% revenue growth and non-GAAP positive income out there.
So when we try to look at the story, I'm trying to figure out what are investors missing. So if you look at your, I think EV to sales right now on forward numbers, you're at about just under 4. And then when you look at some of the competitors like a RingCentral or a Zoom, they're north of 15. I think Zoom's in the 20s. You got Twilio, which is in the same space, but it's it's more CPaaS. But they're up there in that 20 area. So I'm trying to think, what are investors missing? Obviously, you're a nano cap company. You're kind of new on the scene to a lot of investors, just coming to NASDAQ. But one thing was interesting was some investors might look at the acquisition at Sapiens when you look at the pro forma numbers, you see, okay, well, before NetSapiens, Crexendo was, I mean, I'm going to say you were over 80% recurring revenue. I don't know what that number
Correct.
was.
Yep. 85%.
And NetSapiens was probably 50-ish.
Correct. Yep.
Right. So people think, okay, well, and your margins are probably a little better, gross margins, because of your recurring revenue. Like Crescendo's probably. But why don't you tell people now tell us, well, really, if we look under the hood, why are we excited about NetSapiens, and how they can get an increase in their gross margins and changes in their business model have been going on to actually give us some optimism about how those numbers are going to actually get better and more kind of maybe gravitate towards where you guys are at. Right.
No, I think it's a great point, is that, we kind of are that unsung hero out there in the industry. And so not many people know about us. These type of interviews are great because it gets our story out there, gets our message out there to the crowd out there that is looking for the next best thing. So, if you look back at Ring Central, I remember when Ring Central was trading at, $4 or $5 a share, and now it's at, it got as high as $400 a share. I think it's at the 250 range now. Huge valuations, but they've got huge valuations because they're the darling. They've had, tremendous revenue growth out there, and they're taking advantage of an industry that's still got an extreme amount of opportunity. And so if you're looking for the next Ring Central out there, I mean, I kind of feel like we're in that position. I mean, we're growing rapidly, 43% increase year over year. That exceeded Ring Central's Q2 announcement. I think they were at 35%. So we're growing faster than Ring Central now. We've got non-GAAP earnings, GAAP profitability at the end of last year, which Ring Central doesn't have. So I think the biggest challenge we have is that, we're not that known entity out there. We were on the OTC until July of last year. We organically uplisted from the OTC to the NASDAQ. Not many businesses do that, but we were able to do that by just managing the business well and getting the GAAP profitability and increasing our shareholder equity. And so I think we're really in a strong position. We manage the business extremely well. I think from a go forward perspective, if you look at where we're trading at now, our market cap is, similar to what it was, pre-acquisition. So, when you think about the revenue stream that we're going to be adding from NetSapiens on the pro forma basis for 2020, it was $11.5 million, and we anticipate that with growth, that number will be well north of what we're averaging just with the 1 month that we added in June. So I think we're in a really right position to continue to grow the revenue. From a gross margin perspective, obviously combining the two organizations, there'll be a lot of cost synergies there. So they were, it's an accretive acquisition. And so when we think about cash flow, they were positive cash flow prior to the acquisition. With our management strategy, our cost management, and our guidance, it's going to be a very, very accretive acquisition going forward. So I think when I look at the opportunity for growth here, it's pretty tremendous. And what it also gives us, Maj, is a great opportunity for future acquisitions. So when I think about, you and I have been talking about, Crexendo for at least 3-4 years now. And, one of the things that you and I have talked about in many of our discussions over the years was acquisitions. And until we were able to do our capital raise, we did an S1 offering last year in August or September. When we did that raise, that allowed us to have the capital to go out and make the NetSapiens acquisition happen. And so this has really put us in a nice position for future acquisitions. And with NetSapiens, we've got a customer base of 190 UCaaS resellers out there already using our platform. That's what I like to refer to as a stocked fishing pond. So if we think about where our next acquisition strategy is going to be, it's probably going to be in our stocked fishing pond to be able to increase that top line revenue with accretive acquisitions that are already on our platform. And those will have amazing cost synergies going forward. Right now, the focus is really migrating or integrating the NetSapiens acquisition. But once we do that, sky is the limit from an acquisition perspective of rolling up opportunities within our own customer base.
Beautiful. And I think that you talked about, this is interesting. What percent of small businesses have not adopted like a cloud communication kind of platform yet?
Yeah, the Frost & Sullivan report, and they're one of the leading experts, industry analysts and consultants in the industry. And so they released a report just in the last 3 months. And their report showed that 61% of the businesses in the United States still have not moved over to the cloud for their communication services, which means that only 39% have adopted cloud communications. That's great, but that still means that there's a tremendous window of opportunity for future growth. And it's not a matter of if those other 61% move to the cloud, it's when. So it's only a matter of time. The pandemic has really increased that movement to the cloud, and it'll only continue to increase as businesses get back to their normal day-to-day post-pandemic.
I think before the pandemic, that was around 75%, right?
Correct. So, I mean, I think if you look at the pandemic is really, it was already growing fairly rapidly. I think the CAGR on the industry was about, 9 or 10%, I think, with per year. And I think when you look at the pandemic, that's increased it to, almost a 20% CAGR. So when you look at what's going on in the industry right now, businesses, again, it's not a matter of if they move to the cloud, it's when, because the difference between premise and UCaaS that we offer today is that the old premise systems don't allow you to have work from anywhere. The premise-based systems don't allow you to have, a collaboration tool that's built into your solution. So, those old Avaya customers, the old Mitel customers, the old NEC customers that are using traditional premise-based systems, they're really hampered with not having the efficiencies and productivity that UCaaS brings to them. So again, it's I like to use the analogy of the smartphone. Everybody's got a smartphone now, but 12 years ago, 13 years ago, everybody had a Motorola flip phone, and that was the greatest thing since sliced bread, until you realize that the smartphone did a million things better. And that's where UCaaS is. UCaaS is really a much better technology for all these businesses. And so in a matter of time, you'll see all these customers migrating over. In fact, Gartner shows that, by 2024, that percentage will be from 61% down into the teens. So a lot of runway for future growth.
But it's highly competitive. You got to get there kind of fast though, right? Because
exactly. I mean, it's I like to use the analogy of it's the Wild West out there. So, I'm going after the same customers that RingCentral, Vonage, 8x8, and the others are. So I gotta have a better mousetrap. I gotta get there quicker.
So I want to two more things I want to circle back to NetSapiens real quick. So the point I was making earlier about NetSapiens having about 50% of their revenue recurring and the gross margin lower than yours, that's because they have these more, they've been gradually, I think, going to more of a SaaS kind of platform, right? And as
Correct.
I continue, the margins should get better as we go through here, right?
Correct. So just recently, did they start offering a SaaS type offering? So that's software as a service or infrastructure as a service, as we like to refer to it. Prior to that, they were selling their platform where it was a one-time upfront fee and then a monthly recurring fee for the support and usage. And so it was a 50-50 split, but that 50-50 split of one-time revenue versus recurring revenue is migrating heavily towards the recurring revenue model. And again, that's another one of the benefits of us coming to the table and blending with them is being able to backstop, not having that need for the immediate upfront cash outlay. So before, as a smaller organization, they would have to sell the platform with an upfront fee just to keep the business running. Now with the software as a service, it's a lot better model to have a much higher monthly recurring and not have as much of an upfront non-recurring fee.
And that's a little extra accretion you're going to get from this combination as we move through the quarters here, and possibly some upside surprise from as they accelerate that, I'm thinking.
Exactly. So I think that's the way more and more businesses want to go, is less capital up front and more monthly recurring. It allows us to increase the margins and have a better, tighter relationship with those partners.
Great. So let's end it, Doug, with talking about the management team. So what gives us investors the confidence that you guys are the right team here for the job? And you have pretty cool history, you and Steve, and maybe go through that and end it there.
Yeah, I think that if you look at our success, we've delivered on every commitment that we've made out there. We told the investment community that we were going to get to profitability. We did that. We told the investment community we were going to uplist to the NASDAQ organically. We did that. We told them we were going to do a raise. We did that. We told them we'd go do an acquisition. We did that. So we've been successful in all of those endeavors. And it's because we've got a great management team. I've been working with our CEO, Steve Mihalo, for 33 years now in the telecom industry, 22 years at our previous company, Intertel. Steve grew that company from a one-man show to $500 million before selling it to Mitel for $750 million about 10 years ago, 11 years ago. And so, tremendous opportunity in the space. The team here is an extremely well oiled management team that works extremely well together. We've got great tenure in the industry, probably some of the best tenure in the industry that you'll find in any telecom company. We know how to manage a business. We know how to grow a business. We know how to grow a business profitably.
And Doug, where can more people find more information about you?
Yep. Thanks, Maj. Great. So obviously you can go to our website, www.crexendo, and that's spelled CREXENDO.com. We haven't merged the two sites together. So if you want to find out more about NetSapiens, it's www.netsapiens.com. That's NETSAPIENS.com. And if you want to reach out to me, I'm always readily available to answer any questions. dgaylor, GAYLOR at Crexendo.com. And look forward to further discussions down the road.
Awesome, man. Thanks, man. Thanks, Doug, for being here. Look forward to continue to be a shareholder and see how things progress in the future.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.